So why don't we get started? We'll turn on the cameras with our first panel and talk from a Wall Street perspective. So before I introduce the three of them, I'm going to give you a couple stats because these three people have not only been what I think of as the real foundation of coverage in the world of security tech and cyber and software, but all its adjacencies as well. But really, people who have helped shape the industry too. Almost 100 years of sell-side experience between these three people. And I really want to welcome Rob Owens. Rob, thank you. I heard you were stuck in a snowstorm. So in New York, I apologize, but you're not wearing a heavy jacket. So you must be comfortable at least.
Always comfortable.
Thank you for joining me, Rob. I also have Fatima Boolani, who's here as well. Fatima, are you on camera at this point? I think I see you. There you go. Where are you based out of today?
I am based out of New York as well, so snowed under.
Fatima, you're like hopefully a little more comfy there as well and snuggled up. I know you guys had some earnings today with Datadog, and we'll talk about that in a minute. And then also Brad Zelnick. Hopefully you're online here as well. I see you there. How are you, sir?
I'm doing very well. Thanks for having me, Dave.
Yeah, absolutely. The three real important sell-side analysts from Citi, from Deutsche Bank, and Piper Sandler coming on and join. So real quick, I gotta hit this stat, and then I want to get your views on this. It's pretty amazing as a CEO in this space for many years. It's really amazing to watch. And I'm going to read a couple things just to set the backdrop. So S&P 500 ended the year 2023 with a 24% gain. Dow at a record high as well, but the Hack Index was up 37%, which was clearly outperforming S&P and most of the major indexes. This is the large cyber index. We're seeing some of the biggest heights we've ever seen for valuations in cyber. Palo Alto hitting 117 billion. I had to look that up this morning to see where they were at. CrowdStrike at 77 billion, Palantir at 54 billion, Zscaler at 37 billion, Fortinet at 53 billion. If you were to throw Microsoft in there in the top five as well, we'd have almost $500 billion of market value from the top five vendors. So pretty interesting to watch what's been going on there. Almost 200 billion just between Palo and CrowdStrike alone, the two big cyber titans in the industry. And so watching this is pretty interesting. The big getting bigger, the titans getting stronger, or at least from a perspective of valuations. So let me start with you guys, if you can for me. Maybe I'll start with Rob to start, and Fatima, you come on as well as Brad. How do you encapsulate 2023 from your perspective, especially coming off 2022? And what's your view on some of the big vendors and some of the trends?
Dave, I'm still trying to unpack 100 years, to be honest with you, of experience, because I know I've been around a little longer than the other two. So that one stung to begin with.
By the way, I had 30 years in there, so
that helps. That helps a lot with that metric. So thanks. 2023 was a really interesting year, and I think from a breach perspective, everything's been in the news, right? Whether it's been the hacks on casinos, Clorox, you name it. And so we saw massive attacks. And these attacks obviously had an impact relative to business interruption and relative to market capitalization of these organizations. And so as we look at this stark increase in attacks, juxtapose increase in regulation, which I'm sure my competitors can talk about here as well, just relative to SEC disclosure requirements. So it's almost creating the perfect storm. But then again, how many years have we had the perfect storm? And it's interesting to talk about how big Palo's become, how big CrowdStrike's become, because I can go back in time where the entirety of the security investable landscape was around $40-50 billion years ago. And so pretty incredible how this has grown, but I think it's grown in importance as well. So with the larger players, and we've always had this argument between best of breed versus consolidation, I actually do think that we finally have some larger players that have consolidated best of breed platforms. And with new areas of growth, be it cloud, be it network transformation, IoT, I think there's a lot of opportunities for vendor consolidation for people to move forward. So 2023 was a heck of a year, but now you start to discount cloud growth again. And I think we have some indications from the hyperscalers and this morning from another vendor in that space that cloud starts to look better for 2024. You bring in AI and other things, and I think 2024 sets up to be another great year for the cyberspace.
Fatima, let me jump over to you for a minute. You've been covering this market for a long time as well. I'd be interested in hearing your comments, but also one company that really surprised me that might have really got onto the scene that I was very impressed with was Wiz. And you might have seen the results that at least they put online. This is a company in 4 years went from 0 to 345 million, 350 million of ARR, one of the fastest growing companies, I think, in the history. I thought I had Fireside pretty fast when I was CEO there. How do you encapsulate what you saw in 2023 and maybe make some opening comments?
Yeah, I think just to pull on some of the threads that Rob was referencing, just as it relates to cyber has hit mainstream, right? I think we've been around long enough to know and realize and feel that cyber was just something you kind of did in the back room, the server, and kind of had a finite budget. And as a security practitioner or as an infosec professional, you kind of had to figure out what to do with your entire architecture with a very fixed amount of budget. And I will say that in the course of the last decade and really half decade, cybersecurity has just become a mainstream problem priority. I mean, if we even look at just generally disclosures for public companies and their SEC filings, cybersecurity has become a major risk factor, and that has nothing to do with the new disclosure requirements that SEC's come out with, right? So the magnitude of the reputational damage and risk, the operational damage and risk, has absolutely made this a boardroom level priority, and this has been sort of stacking and rolling, as you know, certainly as a catalyst. But I think that has been a huge contributing factor to why a lot of the cyber companies today are seeing much bigger market caps, right? So I wanted to put a pin in that because I think some of what you mentioned, what Rob mentioned, is very important. But as it relates to Wiz and then just generally the cloud security complex, I mean, we are in absolutely uncharted territory, okay, with respect to some of the old problems from the on-prem world sort of reimagining themselves in a cloud environment, but a much higher proportion of new blind spots, right? So your attack surface has metastasized beyond belief here. And, frankly, names like Wiz and then the private sphere and then certainly Palo Alto, they've, cobbled together and cobbled doesn't seem like a great word, but have put together a very elegant strategy to put your arms around sort of these old problems that are showing up in the cloud, but also a brand new trove of problems and blind spots against a bigger attack surface. And that's really why I think you're seeing the type of escape velocity in some of these assets in this realm.
Yeah, Fatima, I think really agree. I thought something that Rob said was really hit me there was this consolidation of these cyber titans into best of breed in a best of suite kind of model. And when we've hit that era, it really creates escape velocity for them. Wiz kind of did that by building it, but it's an interesting, that whole suite there that was really fragmented for a long time with various players and posture management to CNAP to others in an integrated suite. Boom, it really hits. And one other comment you made before I go to Brad was really interesting. We put a report out this past year at NightDragon where we analyzed the top 500 boards and looked for cyber talent or even technical talent on the board. And it was almost shocking to look at the low numbers. I think the number was 1.4% of the S&P 500, which was like 3 people, basically 3 companies had a cyber, even like some kind of expert. And so
cyber curious.
Yeah, exactly. So even half of them didn't even have a technical expert. So to your point, I think there's a lot more to go in the boardroom and things to go. Brad, let me turn to you, get you in this conversation as well. I know you've covered this market for a long time as well. How do you
encapsulate? But I have, yes.
I'd like to look that up. I might have to go on LinkedIn for that one, see who did have the longest. Brad, how do you summarize 2023 and what do you see as the big bright spots there?
2023 was obviously a great year. I think you got to leave it, think about the space, keep it in perspective, right? You had stocks that were up in excess of 100%. The good news was if you own CrowdStrike, you more than doubled your money. And listen, for all the reasons that I think we know very well that Fatima and Rob touched on, we should expect resilience, right? As we think about the overall category, it's a problem that's not going away, and the nature of the problem is such that it's never ending. It's an arms race. It's the only adversarial aspect of IT. We have this new SEC requirement taking effect in December. So I think a lot of things that will keep cyber professionals, many of which we'll hear about in sessions that follow, to keep them on their toes. As for the stocks themselves, it can be counterintuitive because while there's overall resilience, they're not, they're not necessarily immune. There's cyclicality within that. But look, 2023 by all measures was a good year, but you certainly had the haves and the have-nots. You had leading the way CrowdStrike, Palo Alto, Zscaler. You also had some great companies as well that didn't fare quite to that same level of performance and underperformed. So I think I remain very optimistic into this year. I think AI is a really important dimension to the story going forward when you consider what it means in terms of fortifying the attacker, the types of deep fakes, and what the repercussions of all this can be to the broader economy, to upcoming elections, things that you already mentioned. But no, I mean, this is a secular trend that I think continues in full force into 2024.
Yeah, reassuring to hear. And I agree with you just from the budgets and the surveying that we've done. Let me ask a question to all of you, and whoever wants to answer this, feel free. We watched, again, I call it the best of breed, the best of suite pendulum thing that have been going on for years, depending on the cycles. We've watched some of the big titans get out. We haven't seen IPOs in cyber for quite some time. I think it goes back a couple of years, really, where we've had a real pure play cyber IPO, but we've seen some mammoth M&A. I mean, think about Cisco buying Splunk for nearly $30 billion. I mean, talk about, the largest M&A in history has just occurred and just about to close. So when you start to look at the IPO versus M&A and how many companies are sitting kind of on the precipice of IPO, but can't quite get out, how do you see 2024 from an IPO and M&A point of view? Like, help me with the pendulum there from your vantage points that you guys track so closely.
I'd love to jump in if I can, just to kick it off. I mean, I've been involved in active roles in taking some of these great companies, Zscaler, CrowdStrike, and many others to the public market. And I don't think we've seen a pure play cyber deal come to market since ForgeRock, Dave, which you were on the board of. Really, really high quality company. I would say for this year, I'm more optimistic than most that we can see the IPO window open up. You've already had sizable tech companies being talked about coming to market this spring, a Rubrik or a Reddit that have been well publicized. But we probably won't see a normalized environment for deals until 2025, I don't think. You see, you got to realize you've got companies that raised a lot of capital at peak valuations in 2021. Then they pivoted to get more cost efficient. So they're sitting on a lot of cash, many of them. Then you look to an IPO beyond the capital needs, but not just the need to raise cash, but all the other benefits of branding, having a currency, providing liquidity for employees. There's a lot of momentum behind an IPO, but you need to have your ducks in a row. You need visibility and predictability because the penalty for going out too soon is just massive. So for that point, I think that's why you see a lot of great companies, maybe even earlier stage than you would have expected, getting acquired. As for M&A, I don't want to hog the mic. I'll pivot to my colleagues over here, but I'm happy to circle back as we kind of lay it all out.
Yeah, it'd be really
Dave,
I'll
jump in.
You go ahead. Yep.
I'll jump in. Yeah, just to kind of put a finer point on some of Brad's comments. Frankly, I think the bar and the expectation is just higher to go public. So public market investors have become a lot more discerning and have become, frankly, a lot more demanding with respect to the new assets coming to market and new issuances, right? So whether that be a certain growth commensurate with a margin profile that's respectable, that speaks to unit economics. And then certainly the broader, bigger picture theme around, hey, are these assets point products or very strong point solutions, or can they articulate a vision towards a platform? And going back to the earlier points, that's why the big are getting bigger, because there is this motion towards consolidation. So even from a public market investor standpoint, the bar is just higher, and the platformier you are, the better.
I just say one thing that's, I think, really important. When you see we are not 6 weeks into the year, and you've got two of the biggest players, CrowdStrike and Palo Alto stocks, up about 25%. Think about the IRR on that, right? That tells you that there is a ton of demand for quality cyber out there, of which, frankly, there's not even enough capacity to go around. So, I mean, to Fatima's point, I agree. I think the bar is higher. And I think for all IPOs, including cyber IPOs, but more so than ever, the demand is clearly there. And that's not just year to date. You look into December off of Q3 prints that I think we would all agree were, a little bit mixed. And the demand for cyber in the public market has just been on fuego.
Rob, does this make the M&A a really big theme for 2024? A stat I'll tell you I was going to talk about a little later with the venture capital group. Overall investments in cyber in 2023 were down 30%, right? But if you look at the early,
but look at the growth of the decade before, Dave.
Right, exactly.
There's so much capital and so much creation that has flown into this space,
and that's
these
what
companies are going to go somewhere.
That's what I wanted to ask you. So early stage was up 40+%. Overall was down 30, but it was still the second biggest year ever for investment.
Right.
Does this create a little window where the big can get bigger through acquisition and consolidation? And because they're up 25% to start the year, does that embolden them to a little bit more M&A? What's your thoughts there?
I do think so. But, given all the private companies that are out there, I don't think we're going to see the public to public M&A that everyone has predicted, Dave, for the last 20 years in the space. I mean, it does happen quite a bit. And obviously, private equity has been a player there for names that have been out of favor. But relative to the large making more acquisitions, absolutely. And I think just relative to IPOs, it feels like the window's opening. It just wasn't a great environment over the last couple of years economically from an interest rate perspective. And it was only the fourth quarter where investors really started to step out on the risk curve too. Now you've got some very quality companies, but if you look at overall multiples, they have expanded quite a bit. And so with investors willing to step out a little further, outside of this being an election year, which always plays into this IPO window, interestingly, I think we've had 2 years of gestation for some really good companies. So yeah, we will see cyber IPOs, maybe not to the extent that we did a couple years ago, but that will happen over the next 18 months for sure. And I think M&A ticks up as well. These companies have far better currency, as was pointed out by Brad. There's a pretty healthy balance sheets out there for the public companies that, given they had to get their businesses right to satisfy Wall Street, they are generating a ton of cash internally. And even for some of the large scale private companies who have had gestation and growth, gotten their business models right, but big infusions of capital at pretty healthy valuations. And I hope you ask your VC panel later about that one. But all that being said, I think we're in for a very dynamic 18 months, both from an IPO perspective as that window starts to open up again, but also from an M&A perspective.
Rob, while I have you, quick lightning round. We got 5 minutes left. Name me a category that you think is best of breed that could get enough escape velocity into a larger Titan. Is there one you're watching or a crossover from another space that you think could take a big block for this?
Dave, that's tough because I think with the consolidation, everyone is somewhat playing everywhere. I mean, cloud can be a best of breed category, and you talked about Wiz and just the scale they've achieved with a phenomenal business model, phenomenal distribution model too, by the way, achieved in just a very short period of time. So we would look at things like cloud. I think IoT remains compelling. Also managed whatever it is, whether it's MDR, whether it's managed SIM, there still is just far too much complexity that the practitioner has to deal with. And so we think there's opportunities for some of these companies to emerge and to be very successful.
Yeah. Fatima, you tell me what category you're watching close, AI, cloud, you name one, you tell me which one you think is hot.
Yeah, I hate to cheat. I have to agree with Rob. I think we're reticent to call for a cross-disciplinary consolidation between network and cloud and web and email and identity and, the multitude of disciplines under a very multifaceted cyber umbrella. But what we do anticipate is even within those sleeves, whether it's network or cloud, there's likely going to be feature and functional consolidation so that category leaders within those sleeves are going to get bigger and stronger and more feature rich, right? And look, the reality is you're going to have, in a couple of years from now, CrowdStrike and Palo Alto go at loggerheads because they're all in each swimming in the cloud lane, swimming in the network lane, swimming in the endpoint lane, right? So naturally, you're going to have some cross pollination between those categories, but we're not necessarily sticking our neck out to say we're going to have some meaningful, transformative, subdisciplinary convergence, rather more feature and functional consolidation, like we have seen in the user security vertical with elements like CASB and DLP all getting absorbed away. I think the only point that I would add in contrast is just with respect to the talent deficit in the market. I can absolutely see that vendors in identity, in data security, in cloud, in network are going to continue to bolster their human labor capabilities to help monetize and shrink that labor disparity and labor shortage, which absolutely generative AI is going to be a force multiplier on that. So we're pretty eager and keen on seeing that trend play out.
Well, Fatima and Rob agree. Let's see if Brad can weigh in here too. Brad, tell me too, as you answer this, I agree with the cyber titans. I've been calling it the clash of the titans, right? So we're going to watch these clashes of these very large cyber titans, but there's another titan category I call the cloud titans, who also can play a big role. Microsoft's a big one in this. Google's been buying big with the acquisition of Mandiant. AWS has to sit around and go, like, how do I catch up to this game too? How do you see the cloud titans disrupting or augmenting this game as well? And is there a category you see as big?
I mean, I also agree with Rob and Fatima. Years ago, I put forth a chart and research showing cloud growth growing way in excess of cyber growth or cloud security growth, and that those kind of those trajectories would need to intercept at some point. I think though that to the largest players, the CSPs themselves, what your friend Charlie Bell over at Microsoft is doing, what we see from Amazon, Google, I mean, what they ultimately offer, what is ultimately $1 trillion plus opportunity at stake in cloud platforms, all comes down to trust. And I think for that reason alone, it's not just the fact that it's a monetizable opportunity. I love, by the way, the market as you depicted it, over 500 billion, which I'm going to go back and probably borrow, talent borrows, genius steals, as they say, Dave. So offline, I'll have to consult with you a little bit. But no, I've often said to myself that the Microsoft of security might very well just be Microsoft. And I think it's not, for years we've been dismissive for all the reasons that we know. The historical facts of if it were not for Microsoft and all its vulnerabilities, there wouldn't be a cyber industry. But very paradoxically today, given what's at stake, I think we're going to look back. They're going to be a powerful force. But also, ironically, whether it's Microsoft, Amazon, Google, they're not going to get there through M&A. They can't. If you look at the regulatory environment that we're in, they're not. They can't buy a pack of gum. Amazon just had a deal blocked to buy a vacuum company. I think I have the lights going out, the sensor here. I don't know if maybe it's meant to be, but anyway, those are some of my thoughts, Dave.
Yeah, good ones. Okay, last one, if I can. I heard you say threat environment really high, regulation really high. Boardrooms are starting to take this as a real risk. Budgets are up. If you were a bear or a bull in 2024, how do you look at it 1 year from now if we're doing this again? Do you see a same kind of rise? If you could predict it, we had a big rise, 37% in the hack over a year, 25% up already. Do you see that same trend? Rob, put you on the spot. Bear, bullish for 2024 in cyber?
I'd say we're bullish overall. Stocks play off expectations in the short run, play to fundamentals in the long run. And fundamentally, this is a great space. And so we could be really, really wrong for the first half here, Dave. That's my analyst caveat. But I think for the year, we feel very good. From a top pick perspective, even though CrowdStrike, as Brad pointed out, doubled last year, it's still in our top 5 as we look at this year, as we look at all the growth opportunities that some of these companies like a CrowdStrike are uncovering. And so I think it's going to be a great year, but I think it very well could be the tale of two halves.
Fatima, give me your view. Bear, bull, how do you feel about the year?
I'm right down the fairway, actually. We've had a phenomenal run with a lot of these stocks. We've had cyber budget growth at large Fortune 500 companies and even mid-market companies alike that have, seen very dramatic growth over the course of the last several years. And so we think that there is going to be a period of budgetary digestion, just with regards to how much network architectures, network topologies have changed over the course of the last 5 years with COVID and distributed workforces, distributed IT. While we completely agree that thematically cyber is the place to be, it's only going to get more important. In the aggregate, companies are spending, pennies on the dollar as it relates to cybersecurity vis-a-vis the rest of their IT and network infrastructure. So we think that gap is a yawning gap that needs to close. But for now, I think there's going to be a lot of circumspect decision making from the part of large CISOs and CIOs as they think about, hey, if my network has transformed so much, my security ought to follow, and I want to be more thoughtful about my architecture and how my security topology is going to look like for now in the next 5 years. So for that reason, we're a little bit more measured, but the outcome is the same in that we continue to favor the companies that have a multi-pillar, multi-product strategy as it relates to the capabilities they provide. And certainly Palo Alto and CrowdStrike are at the top of that list.
Thank you. Well said. Brad, bring us home here. Give me your thoughts, last closing thoughts.
I'll make it really quick because I'm following two brilliant minds. And I would just say that medium to long-term bullish, near-term like Fatima, a little bit concerned that we might have come a little too far too fast. Just in looking at the equities and the valuations, CrowdStrike is an amazing company, 20 times revenue for it relative to, just about everything I look at my entire comp sheet seems a bit rich relative to, what we might see play out in the quarters ahead. What I'm interested to see, by the way, we should all look at are the 13F filings that you'll see in the next day or two of who's been buying even into the end of December. Like there's clearly a deep desire from some sizable, capital bases to own public cyber. And it'll be interesting to see what those look like. With that, though, hard not to be bullish on cyber medium to long term.
Brad, Rob, Fatima, thank you so much for joining us. Great to see you, my friends. Next time we have you all on, I won't say 100 years of experience. I'll just say highly quality years. And be safe in New York, getting out of the snowstorms. Thank you so much for joining us today, and hope to see you around. Thank you.
Thanks for having me.